Hey everyone, and welcome to this explainer. Look, if you've ever flipped on a financial news channel and instantly felt completely overwhelmed by all those flashing red and green numbers, or maybe you're just looking for a straightforward, no-nonsense guide to actually growing your wealth, well, you are exactly in the right place. Today, we're going to completely demystify the stock market. We're stripping away the confusing jargon, and most importantly, we are going to completely dismantle that incredibly dangerous get-rich-quick trap that catches so many beginners off guard.
Okay, let's dive into this. We've all seen them, right? You open up Instagram or Facebook, you're just scrolling along, and suddenly your feed is absolutely flooded with these screenshots of massive, unbelievable profits. People posting things like, "Look at me, I just made 40 or 50 lakhs overnight." It is so incredibly easy to get swept up in the illusion that the stock market is this magical place where everyday people suddenly become millionaires just by tapping a few buttons on their phone. But honestly, that flashy, social media-driven illusion of overnight wealth is literally worlds apart from the reality of sensible, structured investing. Today, we're focusing purely on reality.
And to get us to that reality, here is our roadmap. Think of this as your step-by-step guide from absolute beginner to really understanding how wealth grows. We'll start by tackling the get-rich-quick illusion. Then we'll look at beating the inflation trap and move on to buying assets for ownership. After that, we'll walk through a beginner's investment roadmap, dive into the magic of patience and compounding, and finally, we'll wrap up by looking at trading as a learned skill.
All right, let's kick things off with Section 1, the get-rich-quick illusion, or basically, expectations versus reality.
So why is it that so many people are suddenly just flocking to the stock market? Honestly, it usually comes down to seeing someone else's highlight reel and wanting a piece of the pie. We hear this wild story about a friend whose money doubled in a week, and we instantly think, man, I want that too. But here's the absolutely crucial question you have to ask yourself when you see those massive online profits. How much capital was actually invested to get that return, and exactly how long did it take? Because let's be real, did someone really just invest 10,000 rupees and walk away with 50 lakhs the very next day? No way. Highly, highly unlikely. The stock market is not some magical ATM designed to instantly make an entire country rich. It requires real capital, and above all, it requires time.
Moving right along to Section 2, beating the inflation trap, and why simply saving your cash just isn't going to cut it. So the crucial point is, why do sensible people even bother investing instead of just safely hoarding their cash? Well, it all comes down to a little thing called inflation. Whenever you have cash just sitting around idle, it is continuously and silently losing its purchasing power. Think about it for a second. Compare the cost of anything today, vegetables, a new smartphone, a pair of jeans, or a liter of petrol, to what it cost 5 years ago. The prices almost always go up, right? That means the exact same 100 rupee note sitting in your wallet right now buys you less today than it did yesterday. If you're just saving cash, literally stuffing it under your mattress or leaving it in a basic bank account, you aren't just standing still. Actually, scratch that. You are actively going backward. You are losing wealth to inflation. Saving alone is simply not enough. You have to invest.
Which leads us perfectly into Section 3, buying assets for ownership, and how you can actually become a part owner.
So where exactly should you be putting that money so it actually outpaces the rising cost of living? The answer is assets. And an asset is beautifully simple. It's just something you own that puts money into your pocket and grows your wealth over time. Listen, buying a stock in the share market is not a random gamble. You aren't walking into a casino or buying a lottery ticket just crossing your fingers and hoping your lucky number gets called. Not at all. When you buy a share, you are purchasing an actual, tangible asset. You're buying a legal ownership right in a real, functioning, profit-generating company.
And you know, there's a story that brilliantly illustrates just how real this ownership power actually is. Think about Steve Jobs. He was the legendary founder of Apple, right? The guy who started it all in a garage. Well, he was famously fired from his very own company. How is it even possible to be fired from the company you literally created? Because the real owners of a company are not necessarily the founders or the board of directors. They are the shareholders. Whoever holds the shares holds the ultimate power and ownership. When you buy shares, you are buying into that exact same power, and a legal right to a piece of that company's future profits.
And the best part? You really don't have to look far to find these companies. As you just go about your normal daily life, you're constantly interacting with massive businesses that you can actually own a piece of. Think about it. You grab a bite at Domino's Pizza, you cook with Tata Salt at home, maybe you shop for clothes at Reliance Trends. You fill up your vehicle at Hindustan Petroleum, or you use an Airtel connection to scroll the internet. If you use their products and these companies are growing, why on earth would you just be a consumer? By buying their shares, your money grows right alongside the company's profit and revenue. It's a real win-win.
Let's move to and see how this builds into Section 4, the Beginner's Investment Roadmap. It's time to take those first baby steps. Okay, so here is the practical, step-by-step how-to. Step 1, you need to open a paperless DMAT account. Platforms like AngelLoan are great for this, so you can actually buy stocks online. Step 2, you need to identify fundamentally strong companies. And Step 3, invest a small amount of money. Look, it's just like swimming. You cannot learn how to swim by reading a book about it. Eventually, you have to get in the water. Putting a sensible, small amount of capital to work is the absolute fastest way to learn because it finally gives you real skin in the game.
Now you might be wondering, what exactly does a fundamentally strong company look like? Well, here are some perfect, rock-solid examples. Companies like Asian Paints, Ultratech Cement, Marico, the guys who make the coconut oil you probably have in your house right now, and Nestle. These aren't flash-in-the-pan trends. These are everyday, robust companies built on incredibly strong foundations. Putting a small amount of your money into established companies like these is a fantastic, solid way to safely begin participating in the market.
Moving into Section 5, Patience and Compounding. This, my friends, is the game of time.
Now, what's really interesting about this slide is what happens to your psychology once you take that first step. When your money is actually invested, the real learning begins. You stop looking at the market from a distance, and you start paying attention. But remember, in the stock market, nothing truly meaningful happens overnight. Real wealth growth relies on the absolute magic of compounding. It's like a snowball rolling down a hill. By consistently investing just a few thousand rupees a month, say 2,000 or 5,000, that money earns returns. And then those returns start earning their own returns. Given enough time, those small, boring monthly amounts can mathematically compound into crores. It is 100% a game of time, not a game of overnight luck.
And this is exactly why we have to draw a massive line in the sand right now regarding your mindset. The share market requires an immense amount of patience, continuous learning, and a true ownership mentality. You are buying real businesses. Contrast that with the betting market or those high-volatility crypto apps. Those are hasty, they're frantic, and they're all about seeking cheap overnight thrills. So many people treat the share market exactly like a sports betting app, and honestly, that is a catastrophic mistake. If you don't have patience, I'll be straight with you. The stock market is simply not for you.
Finally, we reach Section 6, Trading, a learned skill. And spoiler alert, this is not for absolute beginners.
So, what if you eventually decide you want to actively generate income from the market rather than just passively investing for the long haul? Well, trading is an entirely different beast. It is a highly specific, learned skill. If you decide you want to trade, whether we're talking intraday, swing trading, or options, I need to give you a very realistic, bold timeline right now. It is going to take you 1 to 2 solid years of continuous learning, studying, and gaining real market experience to truly understand what you are doing. Nobody is born a great trader. Even the Wall Street legends had to learn the ropes. And here's the hard truth. During those first couple of years, you are going to make mistakes. It's inevitable. You will lose some money. But you have to completely reframe how you view those early trading losses. Think of them simply as your learning fee. Look at it this way. If you want to become a doctor or an engineer, you spend years studying, and you pay a massive amount of tuition money to university, right? Well, the stock market is your university for trading. Those early losses, they're simply the tuition costs required to gain real practical experience. Every single mistake is a vital lesson.
Now, to keep that tuition fee as low as possible, you need a structured action plan. You absolutely must build daily learning habits. Start by dedicating just 45 minutes a day to studying. There are incredible, entirely free playlists and resources all over the internet. Step by step, you need to learn the core concepts. Ask yourself, what is a PE ratio? What exactly is the Nifty? How do you read those weird candlestick patterns? Continuous daily learning is quite literally the only way you survive and eventually thrive in active trading.
All of which brings us to the ultimate question, the one you really have to answer for yourself today. Do you have the patience required to play the long compounding game, to master your own emotions, and to truly grow your wealth over time? The stock market demands your respect, it demands your time, and it demands your willingness to just keep learning. Thank you so much for joining me on this explainer today. I really hope this cleared things up, and I can't wait to see you continue to grow your knowledge and your wealth. Catch you next time.